Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a monthly basis. Thank you so much for tuning in. I really appreciate the support. It's been great to see all the positive comments, and it's been awesome to start this podcast and to be putting out some daily thoughts into the space. It's such a crazy market that it's nice to maintain communication with you all, and really appreciate all the support. I just want to again do a little bit of housekeeping and say that I'm not a financial advisor. This is not financial advice. Always do your own due diligence when making investments. Take responsibility for yourself and your own decisions. This is not investment advice. With that said, another volatile day in the uranium market. And can it be any other way for uranium? No, pretty much not. Let's jump right into the daily scoreboard here. I'm going to discuss the spot price, the flows into SPUT, the Sprott Physical Uranium Trust, and the ETF flows. So first of all, the spot price is $50.25, down $1 from the close of last week. As we know, Sprott closed at a slight discount to NAV, their net asset value, as of Friday's close. So they were likely not in the market today. They were sitting on a little bit of cash, so maybe they did purchase something, but it's unlikely they issued shares. Maybe towards the end. We'll go over the charts in a minute. The trust actually closed out the day positive, while the rest of the sector was mired with selling. But we'll look at the charts in just a second. So what does that mean for Sprott Physical Uranium Trust? Do we have a discount or a premium to NAV? Basically, what it means is that the net asset value of this trust is the value of their U3O8 that they hold, the UF6 that they hold. Now, they don't buy UF6 any longer. That was something that they updated in their prospectus. They're only buying U3O8, which is yellow cake, the uranium that's mined out of the ground. UF6 is the converted uranium hexafluoride, though they do still own UF6. So it's all of their U3O8, all of their UF6, plus their cash. That is their net asset value. And that gets compared to their market capitalization, essentially their outstanding number of units, shares, but they call it units because it's a trust, outstanding units multiplied by the closing price of the trust. So the closing price of the trust on Friday compared with the NAV at the time meant they were at a 1% discount to NAV. So why does this matter? Well, they're not going to issue shares to bring in cash to buy uranium at a discount to NAV. That would be dilutive to shareholders. And because they charge a 1% fee when they purchase uranium, they wait to issue shares until they're at least at a 1% premium to NAV, which I haven't actually looked at the actual numbers for the close today, but I wouldn't be surprised if they're actually trading now at a slight premium to NAV. They probably could have even issued shares into the market towards the end of the day, and possibly will tomorrow. We'll have to see how the trust trades tomorrow. So on Friday, SPUT took in $4 million in new capital. Pretty small raise, all things considered, but their total raise for the entire week, $171.5 million for last week. Nothing to shake a stick at. They did purchase 600,000 pounds of uranium on Friday, resulting in a total of 3.4 million pounds of uranium purchased last week alone, Tuesday through Friday. They didn't purchase on Monday. Since they activated their ATM, they have raised, let's see, $417.5 million, and they purchased over 10 million pounds, or exactly 10 million pounds, excuse me, including last Friday. Just an absolutely monstrous entrance into this market. So I'm going to speak briefly about the flywheel effect of the ETFs. And this also, obviously works in both ways. When funds are flowing into the ETFs and the buying pressure is greater than the selling pressure, the ETFs will issue shares in the market. They'll raise cash to purchase their underlying holdings. But on Friday, we saw a really big selling day. The thing is, the reporting of the share issuance or the redemptions will lag a day or two. It seems like the lag is longer for URA than it is with URNM. So the reporting we saw today that likely was not even for Friday, but we assume that it was probably prior because Friday was a big selling day. 730,000 new shares while URNM reported 25,000 shares in redemptions. This combined for URA is a $10 million of new mandated buying from that share issuance last week. So we'll have to watch this day over day. We expect we will see more outflows based on Friday's action and today's action, which was pretty nasty in the markets, with the exception of U.UN, the SPUT Physical Uranium Trust. URA now has an AUM, assets under management, of 1.05 billion, and URNM has an AUM of 780.1 million. So over 1.8 billion together between those two ETFs. Pretty incredible. So this month to date alone, the month of September 2021, 233.5 million in new money for URA and 255 million in new money for URNM. Absolutely incredible fund flows here that we've seen. I'm going to go ahead and share my screen. Let's take a look at some charts today, if you are so brave. All right, why don't we just start off with the bright spot across the sector today, which was U.UN, the SPUT Physical Uranium Trust, opened up, gapping down to the 1550 level this morning on the open. Big down day on the open, dropped a bit more down to 1502, and then the buyers started showing up, actually closed in the green. This is amazing compared to the charts you're about to see. Let's take a look at Global X Uranium ETF, the URA. Big gap down in the open, traded down from there. Not looking too pretty here, although we did see some dip buyers come in just above the 20-day moving average here. So that's a good sign that at least there were some buyers out there. It wasn't a complete bloodbath. URNM, also a big gap down on the open, but actually traded up. So some buyers showed up, still pretty darn decent volume here. We have a ways down to go still before we get to previous resistance here, maybe about the $72 range, 71, 75, or the 20-day. We could see a bit more weakness here for this one. Let's take a look at Cameco. So we always look at Cameco because it's the bellwether. It's the the most popular name, the most commonly known name within the space. There's been a lot of chatter about Cameco on Twitter, having to do with concerns about management and the company being able to take advantage of contracts in this type of environment. I'm not going to comment on that here and now. If you are a Uranium Insider Pro member, I did comment about this to our members in this week's weekly watch list update, which I put out last night. If you're watching this and you are a member and you haven't watched that yet, please go to the website, log in, and check that out. If you're not a member and are interested in having this more detailed discussion, click the link in the show description that'll take you to the newsletter page. You can find out more about our service. Additionally, if you send us an email to support@uraniuminsider.com, we will send you a sample newsletter to check out from a previous month's macro section. So feel free to get in touch on that front. But looking at the chart here, a big gap down again on the open, dipped down just below the 20-day. The buyers showed up, but it still ended substantially down on the day. Volume pretty darn good here. So I think a lot of the volume on these large caps is coming from the ETF still. Overall, the charts are looking like we're about to make a bearish cross on the MACD. RSI is still headed lower. I think that we saw more redemptions from the ETFs based on Friday and Monday and today's trading. So we're likely to see another day, maybe two, of weakness, possibly chopping sideways. But judging by the action in the SPUT Physical Uranium Trust, it's likely that this is going to be short-lived. So I'm going to stop sharing my screen here. So I'm going to go ahead and look into the mailbag here and see if we have any questions that have come up that I can address for a couple of minutes at the end of the video here. Justin, should I hold through this sell-off? All right. So again, I'm not your financial advisor, and I really cannot tell anybody individually what they should be doing with their own money, and I won't. That's not my responsibility. I will tell you that I was buying today. This is probably the heaviest buying that I've done since July. And it's not because I think that we won't see any further downside. I think it's possible. I don't think we see another day like today, tomorrow. That's highly unlikely. I think we'll see possibly another down day, but maybe much smaller. But today, the volume was great. The liquidity was great. And anything I wanted to buy, it was just giving it to me. So I'm buying here. That doesn't mean that you should. Okay. anytime you see a resource market, regardless of the fundamentals, okay, these resource markets are volatile. It never goes any other way. They're volatile to the upside, they're volatile to the downside, and you can't get that upside volatility without being exposed to the downside volatility. You can't have one without the other. So you have to either trade in a different sector with a different means of trading. Maybe this type of trading is not for you. Maybe this sector is not for you. Or you have to be able to stomach that downside. And this always happens where the late money has to get shaken out. It happened in June, and it's happening again right now. Big down days, 2 days in a row, just flushing out sentiment, flushing out the late money. And the late money always gets taught a lesson. The money that comes in and FOMOs into a sector of fear of missing out, just buys at the highs. This always happens. And it's important to recognize sentiment with these cycles, right? But what usually happens is when you see stocks, let's say, making parabolic types of moves, 2x, 2.5x, 3x the 200-day. Okay, that the 3x to 200-day is unbelievably parabolic. 2x is where you got to start going, okay, what's happening here? Am I holding? Am I buying? Am I selling? I usually am not buying when we're at that type of level, but I'm not necessarily selling either because I have a long-term outlook, and I don't like to trade in and out of these stocks. I just don't. That's just me, okay? If you're a very astute, sharp, on your toes trader, go ahead and do it by all means, but I'm not going to be the one to tell you when to do that, okay? But what I am telling you is when stocks are 2x to 200-day and sentiment is euphoric, regardless of how fantastic the fundamentals are, which they are fantastic right now for uranium, okay? There's no doubting that. Regardless of how good the fundamentals are, you will have something come in to burst that bubble of sentiment. And this was the Bloomberg article about Kazatomprom and SPUT, talking about SPUT potentially buying pounds from Kazatomprom. This is not a big deal, folks. And in fact, I discussed this in the previous Uranium Market Minute briefly, and I discussed it thoroughly in the weekly watch list update for members. Kazatomprom can sell pounds to SPUT. That's fine. I'm not going to go into detail with that. If you want that detail, you're going to have to sign up, and you see that weekly watch list video that I made yesterday. I go into that and why this is not a bearish take. Or a bearish piece of news, I should say. But anytime the sentiment gets euphoric and the stocks are making parabolic moves, something will pop that sentiment bubble. And that's exactly what happened on Friday. And it rolled into today, largely probably because of ETF redemption. So you have to kind of know the reasons why stocks are moving high and know the reasons why they're moving down. Lastly, I'm going to say that, did I expect the equities prices to be much higher than this at $50 uranium? Absolutely. Absolutely. However, I and anybody else that I've spoken to did not expect this type of move to happen so quickly. So I believe the investing community, as well as the nuclear fuel market and all of the players within the industry, are all trying to reassess what the heck's going on here. This happens so fast that it's entirely possible that some entity with the means to do so probably tried to shake down sentiment for a bit because it was getting too overheated. I don't think I'm going to speak any deeper on that subject, but I'll just say that the outlook is fantastic and we're just entering seasonality here. So uranium seasonality is pretty reliable. It doesn't happen every year, but it happens most years, where on average, October through December, and sometimes even into January, February, is very strong for the commodity and for the stocks. And so we're just at the very beginning of that. And we have SPUT now reloaded with another $1 billion in their ATM. In my opinion, this is a quick sentiment shakeout to get all that late money out, and to all the strong hands are buying and all the strong hands are holding. So that's what I'm seeing happening here. I'm not concerned at all. Were these moves far more volatile and deeper than I expected? Definitely, but it's uranium. This is how it works. And so if you want, you can go back and look at charts from the previous run and just kind of put yourself in the place of holding through those periods. You can look at a chart like DML for Denison Mines. There's a period, I think it was September of 05 to June of 06, I believe. It might have been 06 to 07. I might be getting that wrong, but if you look at that, it's like a 45% drawdown over the course of 9 months. I mean, months. I mean, imagine holding on during that period. it must have been insanely difficult. And we're going to have those moments in this bull market. So if you're new to this sector, if you're new to uranium and you're like, hey, I just showed up 2 weeks ago, I just showed up last week, what gives? You have to dig deeper to understand the full thesis of this. And the thesis is far more than hashtag uranium squeeze, hashtag, SPUT, going after the utilities and giving it to them. You got to think deeper than that. And you have to consider all of the spinning parts with this market, including the utilities, including the traders, including the carry traders, including the idled supply that can come online with higher prices, including SPROT, including what they're able to do and what they plan to do and what they can do. All of these things you have to consider. So it's very complex, obviously, but in my opinion, don't get shaken out. Hang in there and enter in tranches, buy in tranches. So especially if you're buying and you're chasing. And if you're one of those buyers that bought last week, you knew you were chasing. Okay. And I'm not shaking my finger at you because I said if I were just showing up at the table, I wouldn't want to be without a seat. And that's true. And I'm fine with being down. And I'm not down, obviously, but I'm fine with being down on a position that I know a lot about the fundamentals on and I have a long-term outlook for. But if you buy in tranches and you entered last week with a quarter position or a third of position or a fifth of position or whatever it might be, and then you get these two gifts of 2 down days that are heavy with good volume, I hope that you're adding another tranche and averaging down on that, because this is a fundamental investment. And if you're trading technically, trade technically. But if you're trading fundamentally or investing, speculating fundamentally, these types of days are gifts if you plan to hold on for the next 12, 18, 24 months. And that's my plan. So with that, I'm going to close it off. Hope you all have a great rest of your day, and I'll talk to you tomorrow. Cheers.